All right, going live. All right, hello everyone. Welcome to the first edition of Sofia Crypto Meetup 2021. It's the year is starting super interesting as usual. There is no time for boredom in the crypto space. But yeah, let's focus on the meetup now. So I see that Jamie just joined us, but before we can we start with him, I have a couple of other things to share. So the first thing is actually the sponsorship, like the sponsors updates. And then we have a couple of news to share, actually 3 pieces of news, the ones that were voted as the top pieces of news for January, and then we can jump in a discussion with Jamie Burke, who is the CEO and founder of Outlier Ventures, one of the coolest VCs in Europe, focused on the things that I'm personally most excited about, and that's NFTs, blockchain, crypto, and DeFi, and how all of these things really come together. Okay. So, as I mentioned, first we're going through the sponsors, and one of our sponsors is Nexo. As you may know, Nexo actually announced a program called Nexonomics last year, I think in October, and the goal of that was to just provide utility for the Nexo tokens and boost the value of its token and improve its tokenomics model. From that, actually, there was a growth of 440% of their token, the Nexo token, and they actually reached $0.776 recently, which is an all-time high, and their current price is at 0.71. So it's a pretty cool achievement. If you had Nexo tokens, you should be quite happy, or yeah, the last couple of months would have been quite interesting for you. But with that, now they're announcing Nexonomics 2.0, which allows, which actually moves the LTV, and the LTV is the loan to value ratio of I think 11 cryptocurrencies on their platform by a number of percentage points. And you can see on the slide here what is happening for each cryptocurrency. So what this means actually is that if you have BTC as collateral, you will be able to now with Nexonomics 2.0, you will be able to monetize a larger part of it. So great news from Nexo. If you're interested in Nexonomics, you can go to nexo.io, Nexonomics, and learn more. Possibly, yeah, register on the platform. So with that said, as I mentioned, the price of Nexo went up. So they started pretty high back, what is it, like 2018, and now they're back up there, reaching new all-time high. So it's an interesting graph. It's good, at least definitely good that they're back to where they have been before, because in the crypto space we have seen a number of tokens just reach an all-time high, and then it's just a downslope slide from there. And then we go to our trademark BTC chart, which showcases the price of Bitcoin for each of the meetup that we have held starting in 2016. This really shows like the big picture. So although the price of Bitcoin went down from 42,000, I think it reached 45,000 at one point, but yeah, it's down to below 30 now. It's still way above the values that we had in 2020. So I'm personally quite hopeful that this upwards momentum will continue. Well, will it be in the short term? Nobody knows, but definitely in the medium term, I expect a lot of things from a lot of positive things to happen with the Bitcoin price. And the same goes for Ether. For a long time, the Ether price wasn't doing that well, so there wasn't much to announce during our meetups. You can see it was just hanging below 400, but now it managed to actually reach a new time high, and I believe there is much more room to go upward. And the reason behind this is actually one of something that I'm going to share during the news. Actually, the first piece of news is actually is Ethereum's all-time high price of 1,475, and then we have the second repo and MicroStrategy. So this is what the community voted as the top news of January. So since I started with the Ethereum all-time high, let me continue there. Yeah, no matter what you think about Ether, how you feel about the cryptocurrency, about its community, about its founder, and so forth, it's currently the most successful, popular, liquid, smart contracts platform out there. It's really is the home of a huge community of developers, of token holders, of builders, and there is so much happening actually on Ethereum that it's very, very hard to actually keep pace with, and I'm personally unable to do that. Only looking at two sectors, which is like or two sub-industries. So the DeFi and NFT, I simply just cannot follow everything that is happening. And you can see the total value locked in DeFi is going up. It's also reaching all-time highs. And another interesting metric that I found for you is the number of actually Ether leaving exchanges, and that was a news a few days ago because the number of Ether on exchanges really went down. And there are a number of speculations of why this happened. The most logical one is that people are moving from exchanges to staking ETH 2.0, and there are currently almost 3 million Ether there, and this number is constantly going up. I guess the 5 to 17% APY is attracting a lot of people, and also is boosted further by the increase of the Ether price that we're witnessing in 2021. Actually, in 2021, Ether is doing much better than Bitcoin currently. I mean, so far, it's almost at 90% up since the start of this year. While Bitcoin, after this last drop, more or less erased the gains that it managed to achieve in 2021. So another reason why I'm very optimistic for the price of Ethereum is, of course, DeFi. DeFi is really the most interesting space, I think, in Ethereum currently, actually in blockchain, but having in mind that larger part of DeFi projects, or the largest part of DeFi projects are on Ethereum. I think, the price, the current price might be overvalued. And behind all of these, like in the shadows, there is also an NFT happening, NFT boom happening. And we're gonna speak with Jamie about this. Most definitely, I know that he's a big fan on NFTs. I am as well, and I actually just bought a VR headset to explore all of these metaverses that have appeared in the NFT space. And that's coming to me tomorrow, so I'm pretty excited. Apart from that, Ethereum futures are becoming more traded than Bitcoin. The value transacted on the Ethereum blockchain is almost twice now than that of Bitcoin. We have layer 2 solutions coming, and really, really high daily volume. So I think despite the recent price decreases in Ethereum, I think Ethereum is here to stay, and I think 2021 will be super, super exciting for Ethereum. Then, with all of that said, let's just quickly go through Ripple. I'm pretty sure that everyone knows what's happening with Ripple. The Securities Exchange Commission in the States charge them that basically they have sold unregistered securities. That happened in December, and then the price went down. But the interesting thing is that the price was going up. It was reaching really high levels, actually, levels unseen for quite a while when this news came out. And what happened with the price? There was obviously a huge dump, but then it kind of stabilized. And now it's trading about 25 cents, irrespective of the new negative news coming from regulators around the world, like exchange delistings and so forth. So, I mean, generally, for me, Ripple was never an interesting project. I've never had Ripple. I've never looked into Ripple. It's much more centralized for my sense. It's very corporate, so to say. So, yeah, if you're looking to make a quick buck with some day trading on Ripple, I mean, you can do it, but nothing else seems super interesting to me in relation to Ripple. You can day trade any other crypto. This is actually a news from today. Florida is going after Ripple with the same allegation. And this graph that I've shared kind of exemplifies what I meant by the little price increase that you can see on the far right part of the screen. And then kind of went down, and it's trading at the same level that it was trading for the better part of 2020. So I mean, it's not like even the price is not news there. As you can see, the all-time high price of 3.5 is a long way, a long way gone, and doesn't really look like Ripple would be able to go back to that again. And then finally, MicroStrategy. So I'm a huge fan of Michael Saylor. He was actually considered one of the most influential people in the crypto space for 2020. And the reason behind why this is happening, actually two reasons. First, he's very eloquent. He knows what he's talking about. He really explains Bitcoin and why there is value behind Bitcoin and why there will be even more value in the future in a way that a lot of people can understand. He's also super bullish, and his excitement for crypto and Bitcoin in particular can be felt through the screen. And apart from that, the second major point is that he's not just talking about how Bitcoin, or he's basically putting his money where his mouth is. And currently his company, MicroStrategy, has managed to accumulate more than 70,000 Bitcoins and has paid for that more than $1 billion. And so the average price at which Michael Saylor bought Bitcoins is 16,000. So unless Bitcoin goes to that level, Michael Saylor strategy will be fine. It's interesting that 45% actually of the value of the company of Michael Saylor, like MicroStrategy, is comprised by Bitcoins. So there was this super annoying journalist in a, I think, Bloomberg interview that asked him 8 times, well, are you a software company or are you a Bitcoin, like a hedge fund? And it was annoying at that time, but retrospectively, looking at this, this question really made sense. So yeah, let's see what's going to happen with the price of Bitcoin, and let's see how what Michael will be doing with his online appearances in social media. I know that maybe this is also important. I know that MicroStrategy is organizing a public event, I think for high net worth individuals or for other companies, other institutions which are interested in purchasing Bitcoins, and this event is happening in February. So it's interesting if there will be if Michael Saylor and his team will be able to convert more institutional buyers to kind of consider Bitcoin as an interesting asset. Cool. So this is all that I had with the partnership, well, not partnership, sorry, with the announcements from Nexo and the news. So now I think it's time to kind of go into the main part of our meeting, and I know that Jamie's time is super valuable. So let's just jump into the discussion with him, and I'll ask Anastasia to, yeah, unmute and let's go. Hey, Jamie.
Hey there.
Okay, let me help Anastasia. All right, so she can also speak. So thank you very much for joining, Jamie. I've been following you on Twitter. So interesting stuff. I think most of the things that you are interested in, I'm interested in. So your tweets are super valuable, and yeah, I'm following everything basically that you are sharing. So welcome, and thank you for finding the time to join our little community here in Sofia, Bulgaria. Yeah, let's jump into the discussion. I guess we can start with the standard question, which is how did you, like, why did you decide to found Outlier Ventures back in 2013? And yeah, how was the ride from there on?
Yeah, well, thanks for having me on. I think I'm trying to remember the last time I was in Bulgaria at one of your meetups. It must be at least 2 years ago, maybe 3 years ago now.
Yeah.
So it's good to see you again, although sadly I obviously can't see all the other people that are watching. So as you said, Outlier Ventures was set up 7+ years ago. So very early, I think we were Europe's first institutional investor into crypto and blockchain. One of the first in the world, and really back then there wasn't much to invest in, certainly from a company perspective. So it's primarily Bitcoin, of course, that caught my attention, and then subsequently Ethereum. But what I did was, quite early on, I hired a co-founder, Aaron Van Ammers, who's still with us, who's our CTO, to get some applied learning, because back then I'm not a developer, I'm not a coder. Clearly this space was going to be very technically complex, and so to kind of navigate it, understand it, and be able to invest in it, not only did I need somebody that had the right kind of technical skill set, but also together we could get some applied learning. And so way back then, I didn't really know where the space was going to go, but basically I agreed with Aaron that I had enough money to kind of employ him for a couple of years, and we'd see where it went, and we'd just play with technology. And so back then we were more of a studio. So we were kind of just playing around with the tech, spinning up MVPs, more from a learnings perspective. And then of course, the industry caught on very quickly, much quicker than I'd expected, with things like R3 bringing a lot of attention in a financial services context. And so during that time, we were looking at a number of investments. I think probably we spoke to over 1,000, there's like 1,500 startups that were claiming to be a blockchain startup in the early days. And very quickly it became apparent to us that most of the startups at that point weren't fully understanding the paradigm shift that blockchain represented, obviously what we now call Web3. They were kind of layering on blockchain onto an existing like Web 2 model. Equally, because we had this like direct first-hand experience of playing with the technology, we came to believe that there was a lot more infrastructure that needed to get built. And so we stopped looking at anything other than working with infrastructure projects. And then we became more of an incubator. So we worked for several years with protocols, solving for any number of problems, both technical, both from a kind of cryptoeconomic design perspective. And so that gave us a very deep appreciation for the technology. Increasingly, that thesis evolved into something we call convergence. So our understanding of Web3 was that it was really about a new data economy, and therefore you couldn't look at blockchain in isolation. You needed to look at it in combination with things like IoT and ultimately AI. So IoT devices kind of harvesting the data, distributed ledgers organizing and commodifying that data, and then AI consuming that data. And we felt that was the big shift compared to Web 2, where instead of the web being dominated by a handful of platforms, platform monopolies that were data monopolies, that increasingly the web would have characteristics of user centricity. So the user would be prioritized over the platform. Obviously, we're still a long way from that in the web at large, but I think the idea of the sovereignty of the user, their identity, their data, and now, of course, digital assets, be it a cryptocurrency or, as we'll talk about a little bit later, NFTs. In more recent time, we kind of believed that a lot of the infrastructure had been built out. So probably about a year and a half ago, we decided we'd move up the stack and focus much more on middleware and the application layer. So middleware, where a lot of this infrastructure is then going to be made usable to more developers. Because if you look at, when people talk about adoption, they usually think of it in a currency perspective or a consumer perspective. But actually sub 1% of all developers on the planet are remotely interested, let alone aware of this Web3 stack. And so adoption's first going to come at the developer level. And then increasingly, we're going to see startups at the application layer that apply that technology to a particular vertical or customer segment, with all of these characteristics around user centricity and decentralization. So when we launched that accelerator, it was, pretty much the depths of the crypto winter. We continued to invest. So we were the most active investor in Europe at the time, not by deal size, but by deal volume. And so over that time, I think we accelerated over 30 startups. And an increasing part of that thesis is now around obviously DeFi, but also NFTs. And sometimes the combination of NFTs and DeFi, where NFTs are either a form of collateral in DeFi. So we're seeing the financialization of the creative industries, audio, NFTs, art, etc. But then also looking at how NFTs can be a form of loyalty and reward in DeFi to kind of remove a lot of this very promiscuous behavior that we see with yield hunting and stuff. So, so that's kind of been the journey. I mean, it's been really interesting. It's great to see the charts that you were showing earlier. Of course, it's great to be in a bull market. I think this one is going to be bigger than we've ever had, bigger than 2017, I think potentially 2021, because of things like NFTs. But at the same time, we're evergreen. There will be a bear cycle again at some point. We'll still be here doing what we do. We hope to be here for decades, kind of doing what we do. And so in summary, like what we are now is effectively the Y Combinator for Web3.
Nice.
That's great. Thank you very much, firstly, for joining. As Vlad said, we know you're really hard to get. Really, your calendar is totally full. So thanks a lot. On the accelerator Basecamp, now is running the 4th cohort, and already literally just now opened the application for the 5th one, right? So can you tell us more what you look into like in a startup besides being up to your to the Outlier Ventures thesis, and Yeah, what do you also see? You have this unprecedented view of the trends, bearing in mind that for one cohort between 250, 300 projects apply, right? So you literally know before everyone else what is coming. Tell us more about that.
Yeah, well, so firstly, it's a pleasure to have you personally working on this current cohort. So I'm very happy to have welcomed you into the Outlier team, and everyone's very happy with what you're doing. And of course, representing Bulgaria, I think you're the second Bulgarian that we've got in the team. Maybe we have a third at some point. So the Bulgarian community is very important to us, and that's also a great pleasure to be here. So as you say, like, we're very fortunate by virtue of having the accelerator, and actually there are kind of two parts to it, which I'll maybe unpack a little bit later, but the kind of primary part of the accelerator is what we call base camp. If you take kind of the mountaineering analogy of kind of getting ready for the climb. And typically we're working with pre-seed startups, so very early. That said, projects in this current cohort are the more mature I think we've ever had. So some of them have already raised, several million. They have had a product for a couple of years. They've got paying customers. So they're not your kind of typical pre-seed startup. In fact, some of them already have live tokens, but haven't fully realized their potential. That said, there is a spectrum. So some of those teams are, very early on, and whilst others are effectively established businesses and profitable businesses. And I think that's really a good sign for us as Outlier, that we're attracting those kind of projects, but also I think for the market that we're seeing much more mature projects enter the space. And, where real revenue is being generated, like actual businesses, rather than just, relying upon a token price. But, as you said, we're very privileged to see lots of startups apply to the accelerator. So, we'll do 3 cohorts this year. I think we'll take in about 10 startups per cohort, so 30. And it will probably have, we had 1,000 startups apply last year. We think that'll probably double this year. So we're aiming to have about 2,000 applications from all over the world. So if you look at the last 2 cohorts, I think it's probably 13 countries at least, in terms where the teams are predominantly based, ranging from the Philippines, Southeast Asia, India. In this cohort, we have our first African startup out of Nigeria. Of course, lots from North America, Canada, America, Latin America, and then of course Europe. So whilst we as a team are predominantly in Europe, it is a global accelerator as a consequence of being able to do it all virtually. But one of the benefits of seeing that many startups is that at their early stage is that you do have this unique window on what's coming through into the market, both in terms of the use cases, and then of course the technology choices that they're making, what protocols that they're using, and what kind of limitations they're experiencing with those underlying protocols when trying to apply it to a given market. So it gives you a very kind of nuanced, firstly, you get a general feeling on the direction of various markets. You get a pretty nuanced feeling on the adoption and limitations of the underlying protocols, which of course is helpful given you can invest in those. But the challenge is that we can't be too far ahead of the market. So in venture generally, you can be right and still lose a lot of money because it's a question of timing. So the trick that we've got as a business is being both slightly ahead of the market, but not too ahead. Because if we have a startup that goes through our accelerator, but that nobody else wants to invest in because they just think it's too early, then we're in trouble, right? Like our goal of an accelerator is effectively that your co-investor network invest, they close a seed round, or increasingly go on to launch a live network. Equally, I think you can look at the kind of asset class that people are raising money through. So of course, during the crypto winter, equity was back in vogue. I think people are increasingly doing a hybrid now. So it's not quite gone full circle back to ICO mania of 2017, where everybody's just spinning up a token in advance of like a product or utility. What we're seeing is projects are raising money through equity, where shareholders have rights and protections, and there's a kind of discipline about how that money's being spent and an accountability. But with a view to then migrate to maybe raising money through a SAFT, which is a kind of a future agreement for a token. And so often we're seeing people do a hybrid of those things. They might do a bit of seed capital into an equity business initially, and then they'll kind of do private sell, public sell. But we are seeing large amounts of monies being raised. Kudos was a really good example of a distributed or decentralized compute protocol. So kind of the compute to a Filecoin storage when you're thinking about a decentralized cloud or cloud 2.0. You know, they raised several million in the private sale, were oversubscribed, and went out at $1 billion network within their first week, which was a pleasant surprise for all of us. I think it's the right valuation, but still, it was a really good signal on the market. So you know, I do think that we are definitely entering. We are already in a bull market. I think it's just getting going.
Thanks very much, and for sharing those success stories. They're really, for everyone that's listening and thinking whether they want to apply. And I really hope that the success stories that Jamie just shared really convinced whoever was like contemplating about it. Also, besides Outlier, you have your own NFT project, the 100x Art, that is literally, like, we're so lucky to have you now because it's launching literally in a few days in the Central Land, right? So can you tell us more about that? Everyone knows that you're very passionate about NFTs, about the metaverse. Also, can you tell us more about the open metaverse and what is the difference?
Yeah, sure. So it's worth saying that if you are an early stage startup, you should definitely apply. We're actually, I think this week or next week, opening up applications for the next cohort, which will start in Q2. Even though we're kind of just beginning cohort 1, or like we're a couple of weeks into that. So you can go to outlierventures.io/Basecamp. You can apply there. Don't worry about doing a complete application, just get it logged and we can always follow up with more information. So that's like the plug done. So yeah, as you say, I have been like what we call dog fooding. So I don't know if the term translates, but you know, the idea is, and I wouldn't recommend doing this, but you know, you should eat the food that you give your dog if you really love your dog. I don't do that, but I like the principle. And so at Outlier, we're very keen on being users of Web3, being Web3 natives. Only in doing that can you really understand the state of play. And of course, that then makes us better investors. It informs our investment decisions. So NFTs, obviously, I've known about NFTs for a very long time, having been in the space for 7 years, but they kind of lost my attention for a while, until probably the summer of this year. I had a couple of conversations on my podcast, The Founders of Web3, with a few people that were interested in tracking the space, and they were really encouraging me to go back and revisit NFTs because the technology had really advanced with the various standards and what was being done with them, but also kind of the level of creativity that was happening and the increasing volume of sales around NFTs. So being not very good at not working, I kind of decided, well, I'll look at it as a hobby. but of course one quite closely related to my work as a consequence of being a bit of a workaholic. And I went away to Greece on holiday and couldn't really switch off. And so between reading a book, I said, okay, well, I'm not going to look at crypto charts, but I will start tinkering around with what's going on in the NFT space. And of course, like NFTs can be almost unlimited in use case, anything that is non-fungible. There are only a few things on the planet that are fungible, like currency is one of them, maybe some commodities like the gas that you put in your car, you don't really care whether it's 1 liter of this or the other, just as long as the car moves. But of course, like where we're seeing most adoption and usage at the moment has been in art and increasingly collectibles. I'd argue that a lot more of the value is now flowing into collectibles, but I'm personally more interested in art. So as I was exploring the space on things like super rare, I started bidding on a few auctions and collecting artists, I guess carrying the pre-seed mentality. I don't like buying at a premium. So I was always looking for new artists rather than kind of buying the artists that everybody else was paying, ridiculous money for, with an eye to A, I believed in the artist, and B, as a form of investment, albeit personal investment. And like what I was most interested in was less what you would call crypto art. So kind of like crypto meme art, but much more what you would class as like high-end art. So art that would be regarded as art irrespective of whether it was an NFT or not. And increasingly a lot of artists, especially, but not limited to platforms like Super Rare, had very established visual communications professionals. Either they were an artist, or they worked in advertising, or they worked in motion graphics, or they built worlds and gaming engines, and they were kind of applying that to create art and minting NFTs, most of them on the side, right? Because they're already very well paid. Like they didn't need to necessarily be doing NFTs. It was just an interesting thing for them. So I started collecting these artists, and this was before the prices got really crazy. So like a high valuation for one of like a 1-to-1 bit of art was like $5,000, the equivalent of $5,000 in ETH. But typically you could pick them up for like 1,000, 2,000. Like now that's peanuts compared to what's going on in the space. I'm personally probably already priced out. I'm not going to personally be paying millions for NFT art, but people are and do. And I think Beeple recently set a record. He's a good friend of mine now. I think he sold like 0.1% of his back catalog of everydays. He's been creating an everyday, like a new piece of art every day for 11 years, something crazy. So he minted like 0.1% of that collection and sold it for over $3 million over a weekend. And that wasn't even the record. I think records already been broken, like for the highest price of a particular NFT art. But what's interesting is, and I'll come back to Beeple because he's really interesting, represents a really interesting trend that's going to start happening in this space. But what became really apparent to me was that I couldn't really find a forum to speak to other collectors. Now I was relatively new to the space. There had been people collecting, like really deep in the weeds on CryptoPunks collectibles, or even, as I said, kind of more like crypto referential art, like, a Bitcoin bull or whatever, for some time. But there wasn't really a forum where collectors were talking, sharing insights. They kind of saw each other as competitors, right, to bid against in an auction. They didn't really think about one another as somebody they could collaborate with. But of course, the space was and still is very early. And so I knew a couple of people that were a little bit better connected into the world than me. One was Gabby, who's much more involved in kind of the gaming aspect and the collectibles aspect. And then another one called Strawberry Sith, who again is like not a big collector himself, but very deep in the weeds in the community. And so I said, look, let's just throw together a Discord server, invite other people that are big collectors, and just have a safe environment where we can talk freely and openly about what we think is going on and which artists we think are interesting. Because the thing is, you don't want to be the only collector of an artist anyway, right? I mean, it doesn't make sense. You want other people who will be prepared to buy it. There needs to be a market for a particular artist. So I created that. It was like an afterthought, really, and it's just kind of blown up. And in all honesty, very little to do with me. Just happened to be the right time and the right forum. So I think we have over close to 200 collectors and artists in there now. We were aiming for about 100 and keeping it quite capped, but it's kind of organically grown. And so it's certainly the world's top 100 collectors, plus a lot of their artists. So some of the leading artists, including people like Beeple, Pranksy, and others. And it's kind of taken on a life of its own. I mean, I've been quite busy recently, so I might not check in for 24 hours. I go in there and there's like whole new channels created. There's like new people in there. There's like threads that are just ridiculous. It'll take you an hour to read them, but like full of alpha and investment alpha gossip about, complaints around what's going on with platforms and around royalties and on-chain data and metadata. It's like just a very rich community, and just has a life of its own, almost despite me. And so we kind of, as a product, one of the things that came out of that was we all had our collections. There hasn't really been a way to display crypto art or NFTs. Usually it's just something that's in your wallet. It's quite passive, and maybe like you'll see it on OpenSea, right? You'll see that you'll go to somebody's wallet and you can address and you can kind of see what art they've got there. So people were kind of using OpenSea as a homepage or as like a gallery front, which is I mean, I love OpenSea, but it's still not really the kind of experience that you would want to have as a collector to display a collection in a gallery context. So I was, as a consequence to all that, also playing around again in my personal time in places like Decentraland, Crypto Voxels. So I got a build of a gallery initially in Crypto Voxels. Very quickly realized that actually the kind of experience I wanted to do was more suited to DCL, Decentraland, than Crypto Voxels. Crypto Voxels is deliberately lo-fi, and actually I wanted like a much richer experience in Decentraland. So I built a second gallery there, and very quickly other collectors started to buy up land around the area. There's a guy called Matty DCL, who's a blogger, big virtual landholder in Decentraland, also a great blogger on NFTs generally. You should follow him if you don't already. And he had this like plot of land that was kind of in the middle of nowhere. There was already a bit of momentum building as art districts in certain places. And I said, well, look, rather than pay a premium to build where everyone else is, why don't we just create our own district? We've got, all the world's biggest collectors. And so Matty kind of coordinated that, and we now have an art district that's emerged bottom up in Decentraland, which, as you said, will formally launch on Sunday. So if you're interested in finding that, it's 100x.art is the website, and same Twitter handle, and you can find out what's going on there. Anybody can go into Decentraland through your laptop browser. You don't need VR headset or anything else. And you can join us there. And basically, I think we've got over 20 galleries. We'll be doing live auctions with various artists. We'll be doing, a lot of artists have donated artwork to what is now Public Square, which will eventually be owned by DAO, and it will control this collection. And so basically it kind of had a life of its own, and to the point where previously 100x was my collection, it was like my thesis for my aesthetic for what I liked in art. very quickly 100x became really about this community, this Discord server community, and then eventually this district. So it just didn't feel right or sensible for me to control what is 100x. So I basically donated the brand, the 100x gallery, to this district, to the DAO. And I think it's going to become its own thing. Like, who knows where it goes? There's people doing really interesting things in the space, like Whale Shark has created a whale token, which effectively is backed by the collateral of a massive vault, probably the biggest vault of NFTs anywhere in the world, of every kind of collectible. You've got things like Flamingo DAO, which is a DAO that specifically buys art. And, you know, I think they just bought a NBA Top Shot. Well, it's not just art, actually. I think they're doing collectibles as well. And I think they just spent $750,000 on an NBA Top Shot. Which is like an NFT collectible for basketball shots, like, you know, classic basketball shots. So there's lots of different models and directions it could go. To be honest, it's just a time thing, because, you know, I've got like a day job trying to make all these startups work. But it's been a great experience, and it's really helped inform my thesis, which, as you alluded to, is what we call the open metaverse, or increasingly, we have a paper that goes out next week, which is called the Open Metaverse OS operating system. So we're happy to talk about that as well.
Cool.
Great, thank
Actually, you touched upon so many things, and I'm just like making some notes here. So, you know, like what you I think what you did is kind of like you brought artists together and you formed this community. You provided them with a place where they can display their art. And I kind of saw this as something that really makes sense. And at one point during the summer, I was very interested in figuring out like who in Bulgaria is a digital artist, and are they interested in getting acquainted with the concept of NFTs. And actually, I got in touch with a couple of, I don't know, some organizations related to digital art, and none of them were interested at all. Like, they were just completely, like, one of them just didn't reply. And then after some time, they said that basically we're not interested. And the other one didn't say anything at all. And this is super weird, because I think we have very talented, untapped potential here in terms of digital artists in Bulgaria, just like we have untapped potential for crypto, all kinds of positions, like crypto people in general. So one thing that I'm kind of like, apart from that, like one other thing that I'm kind of interested in now is these, I call them the NFT pros. And those are guys who like Matty DCL that you mentioned, and I guess it as yourself, who can actually help projects get into NFTs. And yeah, since I'm involved in MetalX, which is, you know, it's connected to Fetch AI, which is one of your, like, part of your portfolio, I'm very interested in kind of bringing MetalX and NFTs together very like closely. And you mentioned that NFTs will be used in marketing, and I'm completely sure that this is not only marketing, but for example, yield farming, like in addition to whatever like token you're minting, you can farming, you can also mint some unique NFTs. But yeah, so about these NFT pros, it would be great to have like someone who can just help you get acquainted with like which metaverse you should buy properties in, then help you with this virtual what is it, like architects who get these virtual properties done, and then connect you with artists that can help you create digital art that is customized for your company. And this is exactly what I need. And I think the community that you mentioned, your community that is like currently growing on its own, basically the 100x art community might be this place And while we're speaking, I joined the Twitter group, and I will be asking questions there because I need the support. So just finally, you mentioned the Decentraland and crypto voxels. I know that there's also Somnium. How do you invest in those? Because we have a lot of investors here, like in Sofia. Do you think that now it's a good time to go buy some virtual property, or do you think it's good to buy properties in all of these, or at least 3 or 4 of this, just to create something like a hedge fund? How do you approach this? Because I think I kind of missed buying a property in the virtual space. And as I mentioned, I'm getting my VR headset tomorrow. So yeah, I really want to like scoop around, explore these universes, and think about like purchasing some property there. So what would your advice be there in this respect?
Yeah, so there are different ways that you can invest in, let's call it the metaverse, right? Because I think this is a way of like having a catch-all framing. So on the one hand, you can buy virtual land. You know, you can speculate on the real estate of a given virtual world. Many of these virtual worlds also have a native token. And so you can speculate on the economy itself of that virtual world. You know, alternatively, you can invest in the NFTs themselves, right? So the virtual goods that will exist in these worlds. So that will vary anything from art, and increasingly art is moving away from being an NFT that you have in your wallet to a social experience. So for example, you've got increasingly 3D objects. A lot of art is becoming multimedia. So you want to go and experience it in the metaverse, right? Not just through a website, not just passively hold it in your wallet. But there's also things like wearables, you know, avatars, as you say, builds, whole buildings. A number of people are specializing in, for example, there's Crypto Motors, which is just making cars. And they're actually guys that designed cars for major automotive companies. And actually they do something interesting. And I'm not sure how much I can say, but like, you know, they're going to flip the model of what is a car company, and it might be virtual first and then extend into the physical world. But, you know, increasingly there will be, at the moment it's still very boutique. So, you know, there's like a handful of studios that make NFT buildings, like so there's one called Voxel Architects, which is the one I use for my build. But there's also, but yeah, there's a handful of people that do it, right? And so their premium's growing, they're fully booked, most of them. There isn't really an equivalent of like a NFT IKEA, right? Where you can just go buy a load of furniture, or an NFT Zara where you can go and buy clothing. Now, I suspect actually a lot of these big brands will move into the space. You're already seeing a lot of fashion brands do digital wearables now. I think Adidas are working on some things. And so a lot of these worlds are quite empty at the moment, right? It's primarily real estate. People are putting up buildings. There's not much going on in them. So if you go into Somnium, which is like the more high end, so metaverse can be looked at in 2 ways, and this is a big part of the thesis. You can crudely put it on 2 axes. One is lo-fi to hi-fi, and the other one is open to closed. And so Crypto Voxels is deliberately lo-fi, right? So their idea is that you could use this on your mobile phone with a mobile phone browser, not even an app, and it would work. And you could join this economy. You can buy and sell things. It's deliberately inclusive, right? It's meant to be kind of financially inclusive, because their belief is the metaverse should be for everybody. You go to the end of the spectrum, which is Somnium. Somnium are really pushing the boundaries in terms of the richness of the experience that you can have there. But that then puts a higher requirement on, you need a gaming PC, you need to plug your gaming PC to your VR headset. That's already thousands of pounds to kind of get the most out of it. They are now allowing you to do some stuff through the web browser. But so naturally, there is more activity, and decentralized kind of somewhere in the middle of that spectrum, right, of lo-fi to hi-fi. So naturally, you get more people in the lo-fi end of the spectrum. It's easier to join. There's less cost overhead. There's less investment in infrastructure, like hardware. And then you've got like the high-tech end where you can do more powerful things. So we were looking at creating a metaverse show in Somnium that we would shoot with guests in VR. Actually, and this is a good learning from dogfooding, technically still a bit too complex. So we're probably going to do it in VR chat. VR chat is not on a blockchain, although increasingly people are integrating into it. So effectively, you can primarily at the moment, people are investing in either the native tokens on the speculation that these virtual worlds will gain momentum. They're either buying real estate on the assumption people will start building things. But then once people start building things, they're going to have to create content to bring people into the building. And the same with people that are speculating on the land. So the next phase will be content, right? And so people are already starting to do events, live concerts, especially with COVID. That's like a big opportunity, right? A lot of artists can't tour at the moment. I think we're going to start seeing bigger and bigger artists. Deadmau5, who his management company works with one of the projects in our portfolio and the current accelerator, is already heavily into NFTs. He's selling music, audio NFTs, and we'll be doing much more streaming and live concerts and events. So once you start to see content, like a reason for people to go to these worlds other than just being an early adopter like you or I, you're going to start to see much more businesses kind of emerge that are native to the space. Gaming is another aspect of it. So if you look at something like Sandbox, Sandbox is really interesting. It's been a very popular app game in multiple editions for years. They've, I think December launched their network, and basically you have builders and then you have buyers, and literally whole economies are being formed where a kid, in theory, the technical barrier is very low. A kid could create a stall that sells t-shirts or provides some kind of function or service in the virtual sense, and they can make a living. And then they'll start like buying other things from the community. So these are like bottom-up economies. There's not that much happening there yet at the moment. It's still the infrastructure, the worlds are being built. I call it like the empty world problem. These are still empty worlds. If you compare them to the closed metaverse, which is like things like Fortnite, millions and millions of users, billions and billions of dollars of revenue, centralized, closed. Any value you create in it, you can't export out of it. So the two are incomparable at the moment. The open metaverse and the closed metaverse are like leagues apart in usage and content and the experience. But as we know, the powerful thing about crypto is you've got some really interesting incentive mechanisms that can pull in capital, that can pull in attention, can pull in industry and work. And so I expect very rapidly the open metaverse is going to explode with content.
Great. Yeah, I think this will happen, and this kind of gives me hope that I'm not too late.
No. It's honestly, it's so early. You can still build. You can still build something in, say, Somnium for a couple of £100. You could probably buy the land for a couple $100, depending on it's where it is in that world. Mm-hmm. So it's still super early. The bottleneck, to be honest with you, is like the builders themselves, because there's not enough of them. But to the point that you were mentioning earlier around like onboarding artists into the space, I mean, it's been really interesting. And some of the artists that I've collected, as I said, some of them are like professionals that just don't need to do this. They're like, working at ad agency, doing like animations for whole crazy adverts and stuff, or they work in film. and they're independently, you know, pretty well off. So you have that end of the spectrum all the way down to, I think the youngest artist I collected was 19. I bought his first 3 pieces on Super Rare. He'd never made as much money his entire life. He was just like, his mind was blown that somebody he'd never met just bought this work for several thousand. And that was a thing. So, you know, I think a lot of artists are discovering crypto as a consequence of NFTs. And this is why NFTs are so exciting, because the problem with crypto has been only so many people are ever going to go to an exchange and buy cryptocurrency. Like, most people just don't think of money in that way. They're not going to speculate on money or currency or a digital commodity. But most people buy music, you know, they might collect things, they get the concept of collectibles. If they see their favorite artist on Instagram say that they're dropping an audio NFT, they're going to be like, well, what's that? And very quickly, they're going to understand the principles of decentralization, of cryptocurrency, of user sovereignty, of portability of assets. And so NFTs, I would argue, are a much bigger gateway to crypto than an ICO or a crypto exchange. And so if you think about what Binance was to 2017 and you know, the selling or speculation of ERC20 tokens, NFT platforms are going to be that times 10 or 100, right? Because they're just going to appeal to so many more people. And I mentioned earlier the artist Beeple. So the interesting thing about Beeple, so in that weekend when he sold 3.5 million, he did it on Nifty Gateway, which is a platform owned by the Winklevoss twins, you know, famous for Facebook and most recently Bitcoin. They bought it very early on. And but with Beeple, he's a ready-made market in and of himself, right? He's got millions of followers who love him. He has a back catalog of work of 15 years worth of work that he can mint. As I said, he only did 0.1% of it for 3.5 million. So he has both supply and demand in and of himself. And his sale, 3.5 million in a weekend, was more than Super Rare did in a whole year prior to that. So you can see the impact of an artist of that level coming into the NFT space. They bring millions of people into the space. They're a ready-made market. Like, they've got buyers and sellers for their asset. Now you're seeing things like the NBA Top Shot thing. And that's just blowing off, right? Because everybody gets collecting, you know, sports collector cards. Everybody wants, you know, an NBA official kind of memorabilia or collectible associated with that Michael Jordan shot, whatever it is. There's like a ready-made market of millions. Like, it's got demand, it's got back catalog of content and assets. And so, you know, it's not like you're starting from scratch. It's like literally you're talking about the financialization, digitization of all this value out there, billions or trillions of dollars. If you look at gaming, as I mentioned earlier, skins in games at the moment, that's like a multi-billion-dollar industry. Currently, it's all locked within platforms. People just can't exchange it for real-world value. So, so basically, that's why I'm super bullish. You know, I think this bull run will 10x 17. I don't know whether it will happen all in 2021 or it goes into 2022, but it's going to be big. It's going to be sustained. And I actually think at some point it will become decoupled from what's going on in crypto. So like whether crypto markets go up or down will be irrelevant to the NFT market and like the price of NFTs and the volume of sales. So it's going to be super exciting.
Yeah, I think so too. Definitely.
Thanks so much for sharing all those insights. I really also think that there is a lot to unravel here. There is a lot like in our lives already. We have like memorabilia. We have so many non-fungible things that actually can be NFT'd, and it would be great, like to have for non-crypto native people the ability to mint their own NFTs, right? Their projects are already working on that, and also wanted to ask about other use cases, not only like you actually had an architect from Voxel Architects to do your space, right, in the metaverse. So what else do you think? Who else in from, let's say, the physical world can also plug in, like architects, for example, digital artists, and besides, as you said, it's not something that just happened overnight. Like Beeple, he's been that art. He didn't become like a billionaire overnight. He's been doing what he does for at least 11 years, right? Yeah. And another thing, do you think that redeemable for something like physical, tangible, redeemable NFTs could be a bridge for adoption also?
Yes.
And
yeah, so good questions. Let me take the two of them. So I think in terms of the spectrum of use case that you could have, as I said, like most things in your life are non-fungible. And so when you think of it that way, it's kind of almost limitless. Now, I think, Vlad, I think you mentioned it earlier about NFTs as marketing tech or ad tech, whatever you want to call it. So if you look at Aave Gotcha, for example, so Aave Gotcha is an NFT game that exists on top of Aave, the DeFi protocol, and where users are rewarded for good behavior in the network, right? Primarily around liquidity and liquidity provision. And so they earn these Aave Gotchas like Tamagotchis, and they can then battle them. And so what's interesting about that is that it's allowed for a form of loyalty within DeFi, which obviously struggled with loyalty. People would just move between protocols to chase yield. And it's done it without effectively offering higher yield, right? Because the problem with higher yield is if it's not linked to actual revenue income, is that you're basically debasing your own monetary system. You're effectively giving away parts of the economy, the monetary system, for free or heavily discounted to bootstrap a network. So it's unsustainable. You know, you don't run a marketing campaign forever, right? You run it as a campaign to get people in. So the great thing about NFTs are you can reward user behavior without debasing your underlying economy, because you're not having to give away the money itself that underpins the system, the economic unit. You can, but you can give NFTs on top. So I think NFTs is a loyalty mechanism. And obviously we talk a lot in crypto about game theory and how we can do incentive design and incentive mechanism design within a network. Well, NFTs are like a great manifestation of that, because you can literally build a game that can be played on top of the protocol, if you're a protocol, or even within an app. And the value of that loyalty mechanism is better than, like, you know, loyalty points, which nobody uses. They can be collectibles, they can be traded, they can be battled. You can just go all kinds of crazy. So we've got a DeFi startup in the protocol at the moment, in the accelerator at the moment, that will be rolling out an NFT loyalty program on top of its wallet and various other things. So you're effectively, you know, rewarding people with NFTs that could be traded and have a life of their own and potentially a secondary market. So I think that is massively powerful. If you continue that line of thinking, we've got a project called NFT42, an Infinity token, and these guys are really leading the way around NFT standards. But they've done integrations where if you have a certain NFT in your wallet, you can access a Discord, or you can access a specific channel in a Discord. or you can access a VR chat. So they become access tokens. And so imminently, hopefully by the end of the month, Outlier, we've got crypto beverage cans. We're airdropping these NFT. They look like branded Coke cans with the OV brand. And that will give you access to various things, including like My Calendar. So you can book out, 15-minute session with me each month. We'll potentially do drops for people that hold that can. They're able to get access to other drops. And we're looking at like a VIP card. You get these little, they look like an Amex card and they'll be OV branded. And if you've got that in your wallet, it will give you kind of all kinds of access to the Outlier ecosystem, to founders, mentors. So kind of, and of course, the more you go into virtual worlds, they're effectively tickets, right? You can have this as a ticket to a concert in the metaverse. So a huge spectrum of things there. I think the other point that you mentioned is really interesting is around this physical to virtual bridge. Actually, it's both ways. It's physical to virtual, virtual to physical, because for the metaverse to exist, it needs to both, so that the strict definition of a metaverse, and a lot of people will disagree on it, but effectively it's when the difference between the physical and the virtual world disappears, right? It's just, it's one and the same thing, it's merged. And so, when you speak to people about NFTs, there was this whole, a lot of Bitcoiners like to dismiss NFTs because it's primarily been on Ethereum. And so there was this big joke amongst Bitcoiners, which is, well, why would I want to buy your NFT? I'll just right click and save it. And it's mine. And it's kind of just a dismissive to say, well, like, why is that associated to any value? But like one of the big problems most of them have is they say, well, firstly, and this will change with royalties, and NFT 42 are working on the royalty component. If I own that piece of NFT, I don't actually own the IP to it. I don't own the rights or the royalties to that asset. That will change. But also, it like doesn't give me anything in the physical world. I've got no way of redeeming it for anything. So we've actually got a project called Boson Protocol, which is going to be a massive play for us this year. They've raised a huge amount of money. They're like oversubscribed by multiples. And their founder was originally a physicist, but then he also helped build a unicorn loyalty scheme company that worked with like Amex, MasterCard, Visa globally. So this idea of redemption of loyalty for things, for experiences, for goods. So he was obviously perfectly placed to solve the very complex problem. He's created a mathematical game, which effectively allows you to guarantee that if you own the NFT, you can redeem it for the physical thing. And so this allows for what he calls, or we call, actually, I think I termed it, but he's kind of evolving it, de-commerce. So rather than e-commerce, you have decentralized commerce. And that can only exist if you solve this physical to digital dilemma. So Boson Protocol have solved that. And they're already speaking to a lot of the NFT platforms, whereby if you own the digital NFT for the work, you also get the physical piece, and it can like tie the two together. And it does it not by like watermarking or anything like that, but by this mathematical game, which were you to try to game it, you would lose more than you would benefit. So it solves it entirely digitally on chain. So I think physical to digital is going to be a really big thing, and Boson is an exciting breakthrough in that space.
Thank you for the answers and all the additional insights. We actually have already a few questions from our viewers.
Sure.
First is Khalid Masood. What can help grow interest and active participation in the Web3 ecosystem, and in particular NFTs in Africa?
Yeah, well, I mean, so as I mentioned earlier, we've done our first investment into an African startup. this cohort. We've been looking actually for a long time. So this project, YCrypt, is based upon effectively access to bandwidth. Because if you look in Africa, they pay some of the highest prices for mobile data anywhere in the world, because they're monopolies effectively. There's very poor competition. And so like by amount of data, they pay disproportionately too much. And of course, also within certain parts of Africa, mobile credit has become a form of currency. Like people are actually paying for things with mobile credit because it has such a premium. So what's interesting about that is not only is it solving kind of this decentralized way of providing access to the internet and stuff, but it's a natural starting point for a cryptocurrency in an African country, because it starts with connectivity around mobile and mobile data. So it's really excited to kind of see where that can go. And if you look at a lot of mobile companies in Africa, they are the biggest fintech companies. They're practically banks. And so there is the potential for this project to kind of go on that trajectory as well. I think, like, more generally, I've understood the question right. Like, how could you see NFTs applied in Africa specifically? I wouldn't say that there's necessarily a nuance, right? I mean, one of the interesting things is, if you look at the NFT industry as it's emerging, you've got the creator side. On the one hand, this is really about providing a toolkit for the creative industries and creators to effectively take control of their creations in an economic sense, right? So to not be reliant upon a record label, kind of a gallery necessarily, or anything else. They can kind of go direct to both a premium, to primary listing, minting on a platform, but equally, they could just mint something and put it on OpenSea. You don't need to go through an art platform. So we have seen, we've got a couple of music projects in this current accelerator. We've got one which is effectively working on streaming, but we've got another one which is working on a beat maker. And this beat maker, you can wrap over the beat maker, it's a randomized beat, and then that's turned into an NFT. And so they're targeting like the hip hop community. Hip hop community is obviously a massive adopter of Bitcoin and crypto generally. But if you think about hip hop as a culture globally, I think it represents 1/3 of all streaming. So like if you were going to pick a creative niche, a cultural niche to go after, beachhead, to extend NFTs into the wider world, hip hop's a great starting point. I know Akon has kind of looked at his own cryptocurrency, Akon coin, in the past. I don't know, to how to assess that. I've not really looked into it much, but I'm imagining he's going to be doing things with NFTs very soon. So I think, a creator can be anywhere in the world. The great thing about Web3, now the open metaverse, is that, as I was mentioning about that 17-year-old in the Czech Republic, like you can be a creator anywhere in the world, assuming you've got internet connection. And that will allow you to create music, upload it, monetize it. It could be to create art, launch your career. So I think you're going to see a real democratization of how new artists can enter the system, rather than it being curated by Hollywood or by Wall Street or by London or whatever it is. So we expect to see much more innovation coming from all over the world, including Africa. Obviously, Africa is $1 billion market, a billion person market, sorry. So equivalent to China. Obviously, there's lots of cultural nuances, political nuances, so you can't really treat it as one market. But we see huge potential there. It's something we're actively looking at. So I don't know if that answered the question, but.
Thank you. I think it does. It's Khalid will say. And actually, we have another question that is partially related, not to Africa, but to the space, from Marcus Monroe. Would you agree with the with an oncoming big brand rush into the space?
Yeah, I mean, we're already seeing it. So Dapper Labs, which has its own Flow blockchain, led by Roham, who's a good friend of Outliers. Obviously, they started CryptoKitties, but now, you know, they're kind of onboarding any number of brand franchises. The NBA and Topshop was the first one. You know, I imagine FIFA is going to be next, whether it's with Flow or somebody else. You've got Luxo, which is kind of doing digital fashion. They're working with a lot of fashion houses now out of Europe. The kind of co-founder was the guy that obviously created a lot of the NFT standards, and I think it's more ERC20 standards, sorry. So, you know, big brands are coming into it. If you look at Sandbox, is owned by another company whose names escape me, but it will come back to me in a minute. They're also an investor in Flow, and they specialize in bringing large brands into the space. So, you know, you can imagine Pokemon's going to be coming into it. Disney's going to be coming into it. The great thing is for brands and brand franchises, it's entirely new medium. So let's say I'm a brand owner at Disney for you know, a particular brand entity in there. They're always looking for ways to maximize that brand, whether it's, you know, clothing and caps, whether it's toys, you know, merchandise, theme parks, like, you know, whatever it is, they're all over it. The great thing is this is an entirely new medium. It probably doesn't exist in any franchise contracts at the moment. So it's not like they've already sold rights to this. This is like entirely blue ocean. And obviously, one of the arguments I make in the Open Metaverse thesis, which we release next week, is it will become increasingly attractive to these brand owners, these franchise owners, because ultimately, because these assets have a life of their own, they might be minted on a platform, they might be initially sold on a platform, but they're then in a secondary market that effectively exists on Ethereum or, you know, or Flow, if it's on Flow, where they can be bought and traded into infinity, right? And you can actually hard code royalty payments into that on every transaction. Every time it's sold, Disney gets a cut forever, like for the history of that asset. Yeah. And so, you know, they're going to be all over that. And because of the liquidity that's involved, the amount of value that's going to accrue into these assets is going to be huge. So big brands are already all over it. The ones that I'm seeing the most are, you know, gaming. We've actually got gaming, fashion, and, you know, I think sports. We've actually got a project of ours called Crucible, coming out of stealth tonight on a VentureBeat panel, like while we're currently doing this. And the person who's opening that up is Tim Sweeney. He's the CEO of Epic Games, which is like, you know, one of the biggest players in gaming that you can get. And his talk is the open metaverse. So like they get this, they're thinking about how they approach it. All the gaming companies will be in it over the next decade. All the major brand franchises will be in it. And like one thing I would say to that is, one of the challenges then is for new artists, because right now, NBA Top Shots has just like sucked up all the money, right? Because as I was saying earlier, you want to, if you're investing in something rather than just because you love it, but because you believe it'll have value, you want to know that there are lots of other buyers. And so you're less inclined to like be the first buyer of a new artist. Like you are the market, right? You're the only person who's bought it. And so like maybe there's one other person that comes along that might sell it to you. You're going to struggle versus Top Shot, which bring with it millions of customers. It's its own marketplace, right, of buyers and sellers. And so there is already a massive oversupply of NFT assets in the market at the moment. There's more supply than there are buyers. If you look at the 100X community, for example, we've got the top the top collectors, including like Max Stealth, who's a very good friend of mine. He was breaking records on Super Rare. But the reality is everybody in 100x are usually over collateralized and undercapitalized, right? They've bought too many NFTs. They just couldn't stop themselves. And like the liquidity, getting back liquidity on those could take some time, especially if it's a new artist. And so I think realistically, until the kind of buyer base grows, a lot of the money and attention is going to be going into the brand NFTs rather than new art.
Cool. Yeah. Actually, I have a like a follow-up question on that. But we're going to like 1 hour and a half almost. Maybe we need to kind of wrap it up. But it's super interesting. I mean, I can talk with you for hours. But in relation to that, to the big brands coming to the metaverse, so I think like the primary concern from them, apart from are there enough people there in the metaverse, will be, is there like an image risk? And this relates to the censorship question. So how possible it is for like a Silk Road type of market or a building to come up and to kind of like start selling, let's say, weed or some kind of like drugs there. So what can the community do in order to shut this down? Is it possible to shut it down? And my last question actually would be unrelated to that. It's just like it's related to DeFi. How do you see DeFi and NFTs connecting in the future? And finally, if you can like say a few things about the Bitcoin price and Ethereum. But I know that there is also a question from the community. Maybe yeah, go with these, and then we have the community question, and then we can wrap it up.
Sure. Yeah. So so if you take, I'll come to the NFT and DeFi one in a little bit. But if you focus on brands' perception of NFTs. So the really interesting thing is that most brand franchises, especially if it's like Disney, you know, predicated on content, audiovisual content, you know, the internet really broke their model, because as soon as something became digital, it became copyable, right? You could share it innumerable times, you could copy it innumerable times with BitTorrent and stuff. And so it broke a lot of creative industries. It broke the commercial value chain, the distribution channel about how you can control it. Now, of course, the promise of crypto has always been you could have something that is digital and scarce and unique for the first time ever. Like, I would argue that is the innovation. And so when you start thinking about that in the context of NFTs, actually this fixes a massive problem for most brands, which is how do they have digital value that doesn't just get copied, pirated, etc. And so the idea that you can now have a provenance of an asset, it can be, you know, it can be unique. It can be a unique addition or a one-off. You can track its provenance, you can track who owns it, you can track where it's sold, you can bake in royalties on every future, like hard code royalties. Like, this is nirvana, the holy grail for any major brand. I would argue this solves most of the problems that they would have with the internet, and allows it to be done in a much more open way, rather than restricting things to only being able to be watched through one streaming channel or like whatever it is. It can have a life of its own, and they can have surety that the rules that they want to bake into it are followed. Now,
no forgeries as well. No forgeries.
Yeah. Now, in theory, you can. So in theory, and it was interesting. There was a whole debate. It was called trash art. So somebody got deplatformed. I think it's from Super Rare, because they were kind of taking a bit of art. It's like a Robness, I forget the original part of the story, but in the end, it became a whole meme, which is trash art. And the idea is that they were taking a punk ethos. And so they said, I can copy any image on the internet and turn it into an NFT. And so like this was a problem for curated platforms, because they say, no, we want to make sure that work on here is unique. It's owned by its creator. There are no copies, whilst you have something like OpenSea, which has no curation at all. You know, you can mint an NFT, you can put it up there and you can sell it if somebody will buy it. And now you can start to fix these things by degrees of curation, either centrally or by the community. And ultimately, it happens a lot less than you'd think. So I had the founder of OpenSea on my Founders of Web3 podcast. I think it went out yesterday. And he says, look, you would expect forgery to happen a lot more than it does. But at least for now, because the community is quite small, like you might get away with it once, but you won't get away with it twice, right? And so very quickly, you're blacklisted by the community, not actually blacklisted, but reputationally outcast. Now that might be a byproduct of the community being small, and like, how does that scale? I don't know. But you can imagine if you want to take a more curated approach, but not centrally, but through community, you could do staking, right? So you could have people that are experts in a particular category of NFT, and they can stake on the provenance of, this is unique. It's not a forgery. So I think there will be mechanisms which will allow for that to happen. Second question, which was NFTs and DeFi. So increasingly, NFTs are a form of collateral. I think there's two parts to it. So as I mentioned, some top shots or Beeples are hundreds of thousands of dollars worth. But increasingly, as we allow gamers to unlock value in platforms through NFTs, a lot of their wealth will be digital, right? So you'll have whole generations of kids, like most of their wealth will be in-game items right now, especially if they're like really good. And I can imagine they are a generation whose wealth will probably forever primarily be digital. Now that kind of sucks right now, because like nobody will give you a house for your collectibles in game, in like Metal Gear, like Solid or whatever, like, FIFA, like a bank's not going to lend you money for that. But what we are starting to see is something called NFT-Fi. Again, founder's a good friend of mine, and that's like a DeFi marketplace for borrowing and lending against NFTs. And so what people are doing is they need a bit of cash for who knows what, could be to eat, it could be to buy some more ETH, like who knows. They don't have to say what it's for. They just need to say, I've got this money, this is collateral. The market then prices that collateral, it sets a floor. You've often got people that are lending to own. So they're hoping that the person defaults on the loan because they want to get the asset for cheap. But there are whole DeFi, and like at the moment it's still very small, but increasingly people are going to begin to use these things as a form of collateral in DeFi. And you're also starting to see things like fractionalization. So there was a fund recently, I've forgotten their name, but they basically bought, I think it was a Beeple again, for a lot of money, or they bought somebody's whole collection for like $1 million or something. And they bought it to fractionalize it and put it under the control of a DAO. And so their idea is that basically they capitalize the DAO by creating a governance token, which is fractionalized ownership of the underlying collateral. And then they're going to buy more art. And so effectively they're bootstrapping a gallery, or whatever you want to call it, by minting a token underwritten by the fractional ownership of the collateral. So you're going to start, like, this whole DeFi toolkit is going to be leveraged by the NFT community very quickly. And God knows where that's going to go. But as I said, I can imagine a time when, in the not too distant future, an 18-year-old esports gamer will get a mortgage based upon his in-game items.
Oh wow, that sounds really futuristic, and yet coming from you, I can see it coming. And thank you so much for touching on the relationship between the NFT space and DeFi. I'm sure like Vlad is like DeFi is his topic. And we have one more question, one last question from our viewers. Again, from Marcus, would cross-chain layer 2 solutions hold the keys to ending tribalism in the NFT space?
Yeah, I mean, so there are a number of different protocols that are making headway in NFTs. As I mentioned, Flow earlier, obviously Ethereum, also Near Protocol are making some headway, and I imagine Polkadot will too. I think Matic are making quite a bit of progress. But the reality is, in NFTs at the moment, most of the arguments that are happening are about on-chain and off-chain, because platforms that are dependent upon, like NFT marketplaces that are dependent upon Ethereum, for example, are having to come up with workarounds to remove like gas costs as a barrier to kind of create work. So I think OpenSea have just done this thing where basically it's not minted, an NFT is not minted on the Ethereum blockchain until it's purchased, and then the buyer pays the gas price for the minting, rather than the artist having to do it in advance of a sale. Now, the problem with that is that what that means is originally the NFT isn't on-chain, a lot of its metadata is not on-chain. And so that then causes problems around royalties, because if I buy it on one platform and if I sell it on one platform, how do I make sure I get the royalties wherever else it's sold? And so there's a lot of debate around on-chain and off-chain at the moment, and that is largely because of workarounds with Ethereum and its limitations that everyone's kind of well aware of. Now, obviously Flow is designed specifically for NFTs, and I don't want to like get into comparing them, but it's designed specifically for that purpose. And I know you can imagine there'll be a parachain. Well, I know there will be a parachain for NFTs because we're talking to them. But assume there might be more than one. That again is going to be configured specifically for NFTs and all of its various considerations. And so, it's difficult to see how this plays out. What I do know is that anybody that's building for one of these other protocols is making sure it's interoperable with Ethereum somehow, because that's where the center of gravity is at the moment. That's where the money is. That's where the collectors are. But again, I think, what Dapper Labs will do with Flow, with Top Shop, will probably dwarf what the NFT market's been on Ethereum in and of itself, just one brand franchise, potentially even by the end of 2020. What year are we in? 2021? Yeah. I kind of believe in a multi-chain universe. I think Ethereum has its place, especially if you're thinking about DeFi, right? So yes, you could create a protocol specifically for NFTs, but if you want them to be able to leverage DeFi, well, then it needs to work with Ethereum, right? That's where DeFi is. So I think Ethereum still is going to dominate the space to that end, but I think there'll be more than one protocol getting a lot of traction with NFTs.
Thank you so much. I think we touched on so many things already, but our time is over, right? Just for everyone that is watching us, the podcast that you mentioned is Founders of Web3. You can follow 100x Art in Twitter too. Jamie's Jamie247. Yeah, we have the streaming will be staying online, so everyone in BitHop channel, so everyone can watch later too. Thank you so much for joining us for like all the amazing. We basically talked mostly about the NFT space, and now I really hope that people, and you are like the person to go to, and basically I hope that people will stop saying, yeah, NFTs, I have this crypto kitty, like I bought it and I never opened it again, that this will be over. I also have now a redeemable, I'm really waiting for a redeemable NFT, and really like soon I'll have an avatar also that I cannot wait to use. So yeah, thank you very much for joining us. It was a super insightful talk we had, and good luck with launching the art district.
Yeah. So thanks for having me again. It's been a pleasure. Definitely join us in DCL Decentraland on Sunday. As I said, you can log in with your MetaMask, hop into the world. Doesn't cost anything. You don't need to buy anything. You can do it through your laptop browser. It'll be a good event to kind of immerse and meet the community. I have no idea what it's going to be like. It's the first one we've done. And then keep an eye out for the Open Metaverse thesis next week. You can get that just by following me on Twitter, the Outlier channels. And if you are a startup, either pre-seed or late stage. So what I didn't mention was that we have something called Ascent. Again, continuing the mountaineering analogy, as you're ascending the peak of the mountain, we do work with later stage projects that are either imminently about to launch a token or have already launched one but want to amplify it. If you apply to Basecamp, we basically look at your stage and decide if you're a fit with Basecamp or Ascent. So don't think that it's just for like really early stage projects. We do work with much later stage projects as well. So if you're working in metaverse, NFTs, DeFi, Web3, data economy, make sure you apply.
Thank you very much for that. I really hope that anyone that's listening to us, not only our Bulgarian community, we have spilled over, like with everything going online, with like some of the, let's say, positive features and sides of 2020. So you can apply now to both Basecamp and Ascent. And Vlad, last words.
No, Jamie, thank you so much for coming. And actually, I will try to put my VR headset to good use on Sunday and join that event to see what's happening and how the gallery looks. I'm very interested in exploring that. So yeah, thank you so much. I think we learned a lot about NFTs. Actually, I knew some, but definitely you are the expert in this. And I'll try to really jump even like deeper into this space, because as you said, I think this will really blow up in the next, in a good way, in the next 5 to 10 years. So yeah, thanks for coming, and see you around in our favorite place, crypto Twitter.
Yeah.
Thanks.
All right, guys, thanks for having me. Really appreciate it, and look forward to chatting to the audience online. Feel free to reach out to me directly.
Thanks.
Thanks, guys. Bye.
Bye-bye.